Colin Graham, director de Estrategias multiactivos de Robeco. Colin, good morning.
Good morning, how are you?
There are a lot of people, a lot of investors watching China. Chinese consumer spending is hard by confinement to major cities. What's your opinion about what's the momentum for China?
Thank you. It's good to be here again. From my perspective, from Robeco, we're long-term investors. So we're looking at where China is in their economic cycle because it has diverged from the rest of the world. So consumer confidence is very low. You've seen services PMIs drop below 40. So there's lots of upside potential in China, especially if the lockdowns start to ease, which to get a normal working economy, they will have to at some point. So there's plenty of upside. You've seen tax cuts, you've seen fiscal stimulus going into the airline industry and the trains. So very much focused on consumers and getting the consumers to spend again. And that, to me, is where we're looking for opportunities within the Chinese equity market.
What do you think about the stimulus plan included a rate cut when other countries are hiking rates?
Well, as you can see, China's in a different phase of the cycle. So cutting rates, fiscal stimulus is going to help. And there's plenty of slack in the Chinese economy that they're not going to have the same concerns about inflation that the US is having. So therefore, there's plenty of room to grow there. I think that focus on the consumer is the right focus for the stimulus, although we do know that the infrastructure spending will stimulate the economy, but because the economy is so big, you get a law of diminishing returns from those stimulus plans. So hopefully there'll be a lot more stimulus coming for the consumer, tax cuts, rising property prices, and that will stimulate the overall Chinese economy.
Li Keqiang said 15 days ago that Chinese economy in the second quarter could be in negative numbers. What do you think about economy in China? It could be in the second time in 32 years in a negative numbers.
Look, we know that the Chinese economy has slowed significantly. And whether the number is negative or slightly positive, I think we can debate for many quarters. But the key point is that the economy has slowed significantly, and the government in China is trying to say, well, actually, we need some more economic growth, especially coming into the party conference at the end of the year. So from that perspective, we're at low points in China, and therefore these are the points you want to look for opportunities, especially if you're long-term investors like Robeco. Plus, if you have a value tilt, that will also help identify stocks that you want to buy in China.
What's your opinion about Federal Reserve decision on Wednesday?
I think that they're trying to get back to neutral rates as quickly as possible, because then they'll be able to pause. And I think the 2.5 looks to be the consensus level, so another 75 basis points. And then you'll start to see inflation start to peak, hopefully. That's our central case. So therefore, it will give the Federal Reserve room to reduce rate expectations going forward. So for us, it's it's this sort of shock and awe approach, where you raise rates very quickly, and then you'll see what happens after that. So I think they want to get ahead of the curve. I'm not sure that they can, but they have room in the economy to slow, and that's what they're trying to do, so that they don't have to raise rates higher than they thought originally later on in the cycle.
Thank you very much for having this time with us, Colin Graham, director de Estrategias multiactivos de Robeco. Good day, good business.
Thank you very much. Bye.